All right, let's jump right in. Welcome to The Explainer. Today, we're unpacking Ferrari's Q1 2026 results and their strategic roadmap, and really showcasing exactly why they remain such a uniquely resilient asset for institutional investors. What we're looking at today is a company that is essentially rewriting the playbook for luxury manufacturing. They are navigating some pretty complex global waters, all while funding a deeply ambitious pivot into the electric vehicle space.
So, look at this staggering figure, 39.1%. That is Ferrari's EBITDA margin for the first quarter. For any institutional investors out there watching the broader auto industry, which, let's be honest, is currently plagued by margin compression, massive capital expenditures, and supply chain fatigue, calling a nearly 40% margin for a physical, engineered product signals unparalleled pricing power. Ferrari isn't just surviving the current macroeconomic climate, they're aggressively compounding their profitability.
Here's our roadmap for today. We'll start with the Q1 2026 financial highlights, look at the volume and supply moat, discuss entering the EV market, do a deep dive on the Ferrari Luce, and wrap up with guidance and long-term resilience.
Okay, let's kick things off with Section 1, Q1 2026 financial highlights.
This chart brilliantly illustrates the absolute heat of their core business. While reported revenue growth was 3.2% year-over-year, you can see their constant currency growth was an impressive 6.0%. That completely outstripped foreign exchange headwinds, particularly the negative hits from a weaker US dollar and Japanese yen against the euro. So what does this actually tell us? It proves that the underlying global demand for Ferrari is incredibly inelastic. Buyers just aren't deterred by currency fluctuations. Digging a bit deeper into the balance sheet, they posted roughly 1.85 billion euros in net revenues and generated a massive 653 million euros in industrial free cash flow. But for analysts tracking the stock, the absolute most critical takeaway here is that third bullet, the total lack of non-GAAP adjustments. In Q1 2026, Ferrari's adjusted metrics exactly equaled the reported ones. This highlights a remarkably clean balance sheet and pure operational strength, completely devoid of those complex accounting maneuvers companies often use to kind of dress up their quarterly earnings.
Now, here's a surprisingly creative flex of their assets. They reported a 23% jump in other revenues. The secret? Literally renting out their Formula One engines to competing racing teams. Turns out the world's most expensive racing hobby is actually a brilliant business-to-business revenue stream that seriously offsets their massive R&D costs.
Moving right along to Section 2, the volume and supply moat.
The crucial point here is that Ferrari treats its demand as an agile, inelastic luxury asset. When the recent surge of hostilities erupted in the Middle East, a situation that paralyzed regional shipments for traditional automakers, Ferrari just utilized its geographic allocation flexibility. They proactively brought deliveries forward to eager buyers in other regions, totally mitigating the disruption. By strictly controlling total volume to just 3,436 units in Q1, they maintained absolute command over their distribution network.
Let's look at what they're actually shipping. Their current mix is still heavily weighted toward traditional internal combustion engines at around 70%, with hybrids making up the remaining 30%. Ferrari is currently in the middle of a planned model changeover, meaning fewer ICE models are technically available, yet they still dominate the mix. By carefully throttling the supply of these highly bespoke, core enthusiast vehicles, they ensure maximum exclusivity and, honestly, maximum profit margin on every single unit that leaves Maranello. Which leads us perfectly into Section 3, entering the EV market. So Ferrari is accelerating its product cadence with an aggressive 5 new models launching this year alone. But remember their golden rule. They are deliberately expanding the range, not the production volume. This is absolutely vital for institutional investors to grasp. By offering a wider variety of specialized, low-volume vehicles, they create more touchpoints for their wealthiest clients, while strictly preserving the scarcity that drives a long-term value retention on the secondary market.
Looking ahead to their 2030 target, we see a highly pragmatic, balanced approach: 20% fully electric, 40% hybrid, and 40% internal combustion. This mixed target brilliantly acknowledges the recent cooling of global EV demand, making sure their legendary combustion heritage survives alongside inevitable regulatory pressures and technological shifts.
All right, let's get to the centerpiece of their strategy. Section 4, the Ferrari Luce Deep Dive.
Chairman John Elkann stated that the Luce is a deliberate decision to lead what comes next. And to lead, Ferrari did something totally unprecedented. They partnered with the design studio LoveFrom, run by Apple visionaries Jony Ive and Mark Newson. This represents a massive cross-fertilization of ideas. They allowed industrial product designers, literally the minds behind the iPhone, to look at Ferrari from an entirely new, holistic perspective, integrating the digital user interface seamlessly with the physical architecture of the car.
And wow, the specifications are just jaw-dropping. We're talking a price tag of roughly 550,000 euros. The Luce is their first fully electric vehicle, and it's their first ever 5-seater. But make no mistake, it sacrifices none of the extreme engineering expected from Maranello. It's got an electric motor on each wheel generating 1,035 brake horsepower, all supported by a 122 kilowatt-hour battery capable of rapid charging. And crucially for investors, the vehicle's development is fortified by 60 brand new technology patents.
Now you might be wondering, who is this car actually for? Ferrari knows the Luce, with its silent drive, which is kind of an ironic concept for a brand famous for its roaring V12s, might polarize traditionalists. But that's exactly the genius of the strategy. Instead of alienating their core collector base, the Luce is strategically aimed at capturing a completely new, ultra-wealthy demographic. They're targeting buyers in places like California and China who are looking to upgrade from high-end Teslas, Rivians, and Lucids, and who want the ultimate premium technology and status symbol. Remember those 60 new patents we just mentioned? Well, here is why they matter to the balance sheet. The intense R&D behind the Luce directly bolsters Ferrari's bottom line through Italy's extremely favorable patent box tax regime. This law provides a 110% super tax deduction for costs relating to eligible intangible assets. By leveraging this, Ferrari successfully drove their effective tax rate down to just 23% this quarter. That is operational efficiency perfectly aligned with technological innovation.
Let's wrap things up with Section 5, Guidance and Long-Term Resilience.
Management has definitively confirmed their massive full-year guidance. They're projecting roughly 7.5 billion euros in net revenues and an adjusted EBITDA equal to or greater than 2.93 billion euros. This signals immense confidence that their strong vehicle mix and the high demand for bespoke personalizations will effortlessly offset any broader macroeconomic headwinds or lingering inflation. Plus, they're targeting industrial free cash flow of at least 1.5 billion euros for the year.
And what are they doing with all that cash? Well, this aggressive capital return timeline paints a picture of absolute financial health. In May, they approved a 640 million euro dividend distribution, up 21% from the prior year. Right on the heels of that, they launched a 250 million euro share buyback tranche expected to end in August. This is all part of a massive 3.5 billion euro multi-year buyback program running through 2030, steadily compounding shareholder value with extreme discipline.
Which leaves us pondering this final thought. With unmatched pricing power, the ability to effortlessly reallocate global inventory, and an expanding electrified portfolio capturing entirely new wealth demographics as they redefine their legendary legacy with disruptive vehicles like the new Luce, just how far can Ferrari stretch the very concept of an inelastic luxury asset? It's going to be a fascinating trajectory to watch. Thank you so much for joining me for this explainer, and I hope it provided you with clear, actionable insights into Ferrari's road ahead.